just give me a second to get them to join. Rosemary is there, I can see him. Wayne is there. My brother Akash from Mauritius. Akash is there. I have another brother from Zambia. Trustford, can you check Trustford? Check for me, Trustford. Trustford is there. And George is with us. Welcome, guys. Sorry to keep you waiting. We won't. I think okay, it's fine. Okay, so as a way of introduction, Rosemary, you're familiar with Rosemary from Fasken Attorneys. She's a senior partner there, director.
Hi.
You talked to, Rose talked to us this morning. Rose, can you hear us?
I can hear you. Can you hear me?
Great, we can hear you.
Can you hear me?
Yes.
Excellent.
Great. My friend Wayne he's been in the industry for what, 20 years. He's the immediate former president of the Institute of Retirement Benefits Africa. And now he's a current director of pension matters. Trustford Chiavula, I think that's the right pronunciation, is the acting director of the Zambia Pensions and Insurance Authority. He was supposed to be here. So Trustford, we still have a big fight. Can you hear me?
Yes, please. I'm able to hear you.
You can hear me clearly?
Yes, Stephen, I can.
Okay. Did I get your title right? Are you the acting CEO of PIA?
I'm the acting registrar and CEO of Pensions and Insurance Authority in Zambia.
Great, great. I've got some Zambian colleagues here. They are very happy to see you.
I've seen quite a number, thank you.
Okay, great. And then my brother Akash Mishra is from the Financial Services Commission of Mauritius. We were supposed to be hosted by Akash, but he wants us to have 14 days quarantine when we get to Mauritius. Then on the 15th day, we do the conference. Akash?
Hello.
Can you hear me?
Good afternoon. Yes, I can hear you loud and clear. Can you hear me?
Yeah, I can hear you. How is the quarantine going?
Quarantine is only for some passengers who come to the homeland. They are sent into 14-day compulsory quarantine, but otherwise it's all COVID-free.
Okay, great. So I've got quite a good panel, and I've got George here. I don't know whether you can see George from where you are. George is just the one who just finished presenting from NWealth. I don't know whether one of our cameras will see George. Okay, it's fine. So we're good to go. It's quite a broad panel from east to west to Mauritius. So we could start. Wayne, can you take over?
Thank you. Thank you. Thank you. Thank you. Thank you, everyone. Thank you, all the panelists. It took a lot out of me this morning to stay as theoretical and broad as possible, to not get into the nitty gritty of solutions and trying to propose things. So I think the discussions we've had this morning have really enabled us to have quite a broad view. And I would be very interested. I know we've got a few regulators, past regulators, and hopefully people who have influence on policymakers. What I think the themes are that we've all picked up on, and I think these are commonly known themes, are probably coverage. You know, are we getting to everyone we need to? And maybe a different name or concept that's been used is probably financial inclusion in a very broad sense. Secondly, it would be investment opportunities, and I think those are things that many institutional investors and pension funds battle with, depending on where you sit and what you're faced with. And then thirdly, are we so stuck in the world that we know that we can't see an alternative, solution to what there might be? I mean, what innovation is there? We talk about the schemes in place and things like that, but are there other products? Are there other solutions? And I know we've touched on micro pensions, both the pros and cons there on that. And again, participation and inclusion would be a big one. So I don't know if everyone wants to have an opening go, or alternatively, I can sort of direct some questions towards you after this very broad statement. And again, I'm going to try and avoid being specific with anything. Shall we just start maybe with Mr. Tresford and move on from there?
Okay, thank you very much, Steve. I'm quite happy to join you. All things being equal, I would have loved to be in Kenya today so that I physically meet my colleagues and be able to make my submission to this conference. However, that notwithstanding, I must say I've enjoyed listening to all the presentations. The presenters are tip-top, and I think they have touched on a number of issues which I may just wish to comment on. The first comment which I have is with regards to, there was a question or concern, observation from Charity from Zambia with regards to the prescriptiveness of the investment guidelines that we currently have. As you are aware, we have the statutory instrument number 141 of 2011. Yes, I do agree that the guideline in its form is very prescriptive in that we haven't seen increased penetration on the capital market. However, I'm happy to report that starting in 2019, we have been working on some guidelines with a view that we redraft them so that they are able to accommodate a wider, the wider spectrum in terms of the options available. We also want to make sure that we broaden the investment options for pension schemes, i.e. we want to include the exchange traded funds and the sovereign bonds. And also we want to increase the threshold for property. At the moment, we are 30%. We want to increase that to 40%. I must add here that the additional 10% will be indirect. We don't expect, therefore, the pension funds, pension schemes to invest up to 40% in a direct manner. And we also want to enable or give power to the trustees to make sure that they apply themselves as they do the investments, as long as these investments are not derivative or speculative in nature, and that the trustees will now have an option, should the guideline not prescribe a particular class, they have an option to apply to the office of the registrar, so that then the office of the registrar could consider that application on a case-by-case basis. So I thought I needed to speak to that. The other issue which I thought I could speak, which also applies to Zambia, is with regards to the conversions of the schemes. Like my colleagues have indicated, Zambia has witnessed a lot of schemes converting from DB to DC. So what we have though done is, in order to be clear in terms of the steps that are to be taken, we have issued a guideline which speaks to the conversion of the schemes from DB to DC. We want to see some orderliness in this. The other issue with regards to the policy reform, which I thought I could mention, I saw by when the retirement ages, the accrual rates and the like. For Zambia, I think we have not remained behind. we have increased the retirement age in the recent past. The retirement age used to be at 55 for Zambia, but now it has been increased to 60 years, with a provision for early retirement at 55 years and late retirement at 65 years. So we think that maybe this is a move in the right direction, especially that the benefit levels from the schemes to a large extent depends on the length of service. So we strongly believe that with the increase in retirement age, obviously then there will be an increase, there will be an increase in the length of service which the members would have to put in. The other matter I think which we are dealing with, I think in Zambia is, as you are aware, we have 3 statutory pension schemes. The Act does give us power to supervise the other 2, but the main one, the National Pension Scheme Authority, is outside the regulatory ambit of the Pension and Insurance Authority. We are reviewing the Act, our Act, so that all the 3 statutory or public pension schemes can be under the regulation of the Pensions and Insurance Authority. I thought for a start I could end here, but I'm still available for some more comments and concerns, observations that will be raised. Thank you.
Thank you very much. I think there's what you're confirming is that a lot of the things that we've discussed earlier today are a reality for you, and working for forming some of your thinking. I'm going to move on, and then maybe we can raise some topics. And I mean, if anyone has questions for another panelist, I think that's also an opportunity. If I can ask Akash for his inputs and his thoughts from your side. Thank you.
Thank you, Wayne. As Trisford said, I am also a bit unhappy not being able to participate physically, and more unhappy for not being able to welcome you all to Mauritius. This was earlier scheduled for Mauritius, and because of international borders still being closed, we could not host you, but there will always be another time in this beautiful island. Mauritius, as you know, is just a dot in the Indian Ocean. The population is very small, 1.3 billion. We have various pension schemes, the 4 pillars of the pensions, and the biggest problem we are facing in Mauritius is, of course, of an aging population, a low fertility rate, and to top it, the massive problem which is everywhere of underfunded DB schemes. So for the aging population, what we have done is we have increased the retirement age to 65, and there is a new concept which has come from September 2020 in Mauritius, which is called as CSG, Contribution Social General. It is in French, where the contribution rates have sort of increased, or the actual contribution has been increased, and this would be available to the pensioners from the age of 65. Earlier retirement age was 60. So the new concept which has come, I just want to give a quick brief that earlier we used to have a national pension fund, NPF, which was one of the mandatory pillars, where the contribution rates were 1.5 and 3% from employee and employer, subject to a ceiling of, 18,000 MUR, which is very low. And anybody earning higher than that also would contribute only 3% of the ceiling, employer. So now the ceiling has been removed. So government has brought in a big reform, I would say, in the sense that proper social security should be available to all the population, irrespective of whether you are from the marginal sector, you are from a small time industry, you are not in a formal pension scheme, etc., etc. This is there. Then we of course have the other pillars, the private pension schemes which we regulate, and the civil services pension schemes which are by the government. So the basic retirement pension continues for the age of 60, but how it will go along with the CSG, we have to see. Now, if you ask us what is the most prominent thing you are doing or in the near future, of course, we are coming out with a guideline which Tresford has already brought out in Zambia, but we are coming out with it on how to handle the underfunded DB schemes. So, and how to allow these DB schemes to shift or convert to a DC scheme. This will be the theme of my presentation over the next, some hours. That's all from my side for now.
Thank you. I want to come back to you on a different issue for Mauritius. I know it might not be your side, but I mean, capital markets and those things. Another thing, I think, if we can touch on that a little bit later. Rosemary, if I can hand over to you and just if you can share some of your observations and thoughts. Thank you.
All right, I'll be very brief. I know we don't have much time. I just want to mention, I was stressed, but I was very interested in what's happening in Zambia. And as it happens, at the same, we are also have draft legislation in place. Well, it's being open for public comment to provide that the state funds, the government employees pension fund and others, will be subject to regulation under the Pension Funds Act, the same as everybody else. And that's going to be a massive change and will require quite a lot of exemptions for a period, I would imagine. I was also particularly interested in Kofi's discussion around, the work of his organization in trying to make it easy for people in the informal sector to save. We have tax-free savings accounts, but there are various financial institutions that are licensed to offer these, and it's nothing like what is happening in Ghana. I think that's a really innovative and clever thing that people are being followed up, asked, reminded to put in a little bit of money, that every little bit counts and that sort of thing. That's not what's happening in South Africa, and I think Ghana is really showing us the way on that. And then finally, just one of our biggest reform drives in South Africa is to try to reduce the number of funds so that we have fewer but better managed, better governed funds that can exploit their bulk buying power and bargaining positions to produce better outcomes. And at the moment, there's no compulsory mergers, but our regulator has said that if funds can't show that they can produce value for money, and that hasn't yet been defined. But if it looks like there's a disproportionate amount of the contributions are going into costs, funds might have to be, they might issue directives compelling them to liquidate or merge with another fund. And I think that would be an important development. We've got quite a long way to go, but I think that's it for me.
Thank you. Thank you. And then George, if you're any observations at the moment or any questions, I'm burning. Like I said, I'm trying to not get specific or ask too many specific questions and then let the conversation flow. So your thoughts.
Thank you very much, Wayne. I think my thought on the reform debate is the observation that it needs to be anchored on an informed stakeholder base, and that is very, very key. So when we have an opportunity for a forum like this, where we are able to benchmark and see this is what's happening in Kenya, this is what's happening in Ghana, this is what's happening in South Africa, then it's a good way to go. So on that note, may I also say that I look like the only happy person to participate physically, because the other panelists three in a line to say that it looks like I'm privileged. But that notwithstanding, I think the other observation is that as we have changes here and there around the structure of the pension funds and the way the benefits are structured, of course, there is a uniform shift away from DB schemes. And there was one anchoring, I would say, characteristic of DB schemes was that the way it would be structured to address the need or the benefit at the end of the period was actually very, very deliberate. Hence, the approach to fund it with the employer contributions and an actuarial accrual fraction and all those things. It was very, very deliberate. But when you move to DC schemes, I think there's one thing we lost there because most of them are currently positioned around affordability and cost. We are not very, very deliberate around how we arrive at those rates. To say employer will give this percentage, employee will give this percentage. And I think that is a departure away from the original objective and the original intention, which I think as we address the case of reforms, it's one thing that we need to revisit. And then just go back to the three anchoring policies within every pension scheme. How is it funded? How are the investments done? And also how the benefits will be paid out at the end. Thank you.
Thank you very much. I know we don't have much time. Just if there's anybody, there are two things I just thought if we could touch on quickly is technology, and I think you've spoken about that quite a lot, George. I mean, technology and the use of technology to reduce transactional costs. And I think that's been a big inhibitor for lots of savers over a long time. And I mean, Rosemary mentioned something in South Africa called tax-free savings. The reality is that it's so expensive to save, it nearly doesn't make sense to save. So, you know, you want to make sure that when you create the opportunity, it's something that is meaningful and viable. And then I know this is a theme that runs through the conference is, you know, the investment side of this, but how do we as African pension funds or people working in the African pension sector ensure more cooperation? You know, like we spoke about policy, but I think investments in particular is an area where we could all do much more and learn from one another, you know, set aside our rivalry and say, you know, as a continent and as a people, you know, how do we use what we've got to make it better? And again, I'm being very broad, but I mean, is there anybody, that's my observation and sort of my sort of clarion call at the moment. Is there anybody who wants to add anything to that before we open for audience questions? And Akash, that's why I was looking at Mauritius, because I know there's always been a big drive for opportunities across the continent. But I mean, if there are no questions other than those observations of mine, over to the audience then.
Okay, do we have questions for the panelists? Okay. Do you have a sanitizer? Oh, it's behind you.
Thank you. Again, I'm Monica, Wealth, Kenya. So my question is to Akash. He mentioned something that triggered my curiosity, as being in your country and venturing by opening a branch there. So you mentioned on the issue of aging population, low fertility, and unfunded DB scheme. And you commented on the aging and unfunded DB scheme. Out of curiosity, I wanted to find out what you have been doing about the low fertility, just to ensure that the country of Mauritius does not go extinct, does not exist.
Unfortunately, I do not have any magical solution to it. These are the pitfalls of a modern life where both husband and wife work, and I mean, one baby is what they can maximum plan for. Mauritius is, I would say, provides a lot to its citizens in terms of social security. And if you would have seen, Mauritius is one of the highest per capita income countries. Very, I would say, I'm not a Mauritian, by the way. So I can still say that this is what one aspires for, where I mean, I say it always, and I mean, it's out of context, but I would say where you can get drinking water from a tap, I mean, uncontaminated drinking water, you feel you have arrived. For me, this is one of the, benchmarks for a sophisticated or I would say come up well society. So Mauritius provides for free education, free hospitalization, free transport, lots of freebies are there. Despite that, the population is not growing as it should be, and there is a plan of the government to invite the diaspora back to Mauritius. There has been a, I would say, talent has gone out of Mauritius, which the government has always been putting in different schemes, tax incentive schemes for them to come and stay and keep the population, I mean, at the good level, which would, run the economy. So I would say it's more of a cultural and social issue here, despite all the good things of life being present here. So probably government has to make it more exciting for diaspora also to come and for the local population to think of. Not sure if I have answered the question.
Okay, do we have another question?
Incentivized Mauritius in a big way.
Okay, we have another one here.
Thank you. My name is Joy from North Kenya. I have a comment. Thank you, panelists, for that very informative discussions and conversations around pension. Mine is a comment and also a question. I think I have noticed that from even a presentation by George, that changes are only constant. So we have to keep on changing in this industry in order to be effective and to be able to meet the different needs that we get faced by every single day. I would like to have a question to, I think, Rosemary, in terms of assets. What kind of recommendations would you have to asset solutions to millennials, especially? Millennials here being people who own, say, like a company and whose perspective on retirement is different. For example, I own a digital company and my retirement perspective would be perhaps like selling my company for, say, $1 million. And that means for me at that particular time, by retirement. So what do you think, what solution can we be giving to these people as well, even as we think about the solution on micropension for other people who are in the informal sector, but now there are also other people in the informal sector who are sort of like high level and own companies and are young, and they do not buy into the idea of contributing to retire when they are 50 rather. Yeah, thank you.
Okay, Rosemary, I'll take another question before you answer.
Sure thing.
Mine, Rosemary, is also directed to you. This is Sandeep Raichura. Rosemary, I just wanted to make sure that I understood you correctly this morning. So in the South African legislation, you referred to Regulation 28. So are there any upper limits in terms of what investments, pension funds, what asset classes pension funds can invest in? Because my understanding was that every scheme has its own scheme-specific policy and they derive their own asset allocation in that way. That's one. And secondly, you talked about the government proposal or a policy objective to require funds to invest in certain areas. Is there any legislation around socially responsible investing in the South African environment? Because this is a very topical issue in some of the countries that we operate in, where pension funds are seen to be needed to want to invest in areas that are deemed to be socially responsible.
Good. On the question of millennials, I'm not a financial advisor, but I do think there are interesting policy options that governments could take. In South Africa, we're looking at the possibility of auto-enrollment. So to get people in, so even if you're owning your own company, but your company must enroll you and your staff automatically in a retirement fund unless you specifically opt out. There are various sort of behavioral economics interventions to try and get people to save, even when they can't be compelled to for one reason or another. It might well be that ultimately, and it is something we're considering in South Africa, whether we should have a national social security scheme where everybody does have to contribute. Because it's true, I've been there myself, trying to funding, preferring to fund in my law firm rather than save for retirement, because you think your business is going to be a success and you'll make a lot of money out of it. But there's a problem of over-concentration in that alone. And we need to provide financial education, but also I think some of these nudges like auto-enrollment or even direct obligation to contribute something towards retirement would be important. But as for investments, I'm not qualified on that one. Sandeep, I am really looking forward to your presentation. I love this idea about these 6 big pension funds trying to pool resources and drive investments. I think that's very exciting, and it would be wonderful to see. I mean, my imagination's running. If we could do this across the continent, can you imagine if there's a cooperation between pension funds to drive transport infrastructure so that we can trade better? I mean, that would or telecoms, or all of it. I think it could really make a difference to not only our countries, but to the pension funds themselves. As regards socially responsible investing, yes, our Regulation 28, it does impose upper limits on certain asset classes, investments in certain asset classes. We can have 100% in cash, which seems a bit odd. You can have 100% in debt instruments issued in government debt. But apart from that, there are various limits prescribed. So every pension fund has its own is required to have its own investment policy statement, to devise its own investment strategy. But all of this is subject to asset allocation limits that are limits on both asset classes, issuers, limits on how much you can invest outside the borders, and so on. So there are various kinds of limits in Regulation 28. Regulation 28 does, however, also direct the boards of pension funds to take environmental, social, and governance considerations into account when making investment decisions. So this is quite it doesn't say how they should do it. And at the moment there is discussion around, should we be imposing, the reporting requirements and how you measure so ESG factors and report on your how you consider them and so on. But it is an important step along the way of trying to improve, frankly, improve investment performance. I think there's fewer and fewer people these days saying that ESG inevitably drives lower performance. I think that has been debunked quite effectively in the last few years. And it should actually produce better investment performance. But it remains to be seen how our biggest problem in South Africa, as I've mentioned before, is we have too many pension funds. I think there are about 1,500 that are active. Many of them are really small. They don't have the resources to do the job properly. But once we combine them and have a few really big ones, then things can get really interesting, particularly around ESG, around cooperative ventures, around shareholder activism, impact investors. There is actually a growing appetite, I think, for shareholder litigation by pension funds and so on. So this is a very exciting time to be involved in any of this. I hope I've answered the questions.
Thank you very much, Rose, for your presentation. Colleagues, good afternoon. It's Elson once again. Rose, just to pick your brains, there has been some transition back and forth between defined benefits and defined contributions. And I understand some jurisdictions like New Zealand, they are a decade or two ahead of Africa. Now they talk of defined ambition. What can we do as Africa to transform ourselves? And what can we do again if we are to set up things like sovereign wealth funds? How can we invest to ensure that we develop ourselves? Thank you. Sure.
I'm afraid those big questions I feel are a bit out of my league. I'm just a simple pension lawyer. But I remember when I was a pension regulator and I used to go to the conferences of pension regulators, IOPS, there was all this talk amongst the European regulators about defined ambition. We had already gone almost 100% defined contribution in South Africa, and I found it quite puzzling. But in a way, I suppose it was largely around no guarantees, but we're going to try and produce a pension benefit outcome as close as possible through our investment strategies and so on to DB in order to maintain replacement ratios that would produce reasonable outcomes. But on the developing ourselves, I'm a big believer in collective empowerment. That's why I love pension funds. I think sovereign wealth, if a government has the ability to fund something like a sovereign wealth fund, it could do great things, as has happened in some other countries. Not only to develop the economy, but also to put money back into the fiscus. But I think those of us who are not in positions of power in government and so on, we can still do a great deal by making funds, pension funds, retirement funds, more effective, and to get them to work together, get them to scale up, but also to share their knowledge and strengths. And it's an interesting thing being not-for-profit organizations, obviously serviced by profit-making organizations, but pension funds really have huge potential to transform their own fortunes, but those are the countries and the regions. I wish I could give you a more specific ideas, but as I say, it's the financial or economics is not my big strength.
Okay, I think you have done your good share of answering, Rose. And I think at this point, we will have to cut the questions short. Looks like this discussion needed more time, but we are running very late for lunch. I would want to thank all my panelists to avail themselves. I know it took a lot of your time, Rosemary, Tresford, George and Wayne and Mishra. Thank you very much. Let's appreciate them. Thank you very
Thank
much.
you for the opportunity.
We hope next time you will join us physically. If we go to Mauritius or we'll be back in Kenya, we want all of you to be here so that you can talk to these people more. George, thank you. George is a privileged child. He's the only one in the room. So thank you, George. So we'll break. We will tap into you. If we need you, we'll call you again if you're available. Thank you very much.
Thank you.
Thank you. Akash will confirm about your presentation later. Thank you.
Okay, sure. Thank you.
Thank you.
Okay. So I think we'll break. We are running a little bit late, so let's keep the lunch as short as possible so that we don't go late in the evening. Thank you. Unless somebody has a question? Second. I will just give you details. The lady outside, she's got all the details about lunch. Sorry about that. You could just give me maybe a second, but I'm sure the team is outside with the venue. Oh, like 30 minutes instead of an hour? That would be good for me. Yeah, please. Thank you very much.